So we want to go for fixed asset register. So open a fresh sheet like this, a fresh worksheet like this. So what is it all about? The fixed asset register is just a detailed information of all the assets, You understand? Like when we're doing our financial statement, we know we have fixed asset movement, Abi, or we have asset movement. But that asset movement does not give us full details we need concerning each asset. We have motor vehicle. That motor vehicle was about 10 million, but we don't know what type of vehicle we are talking about. We don't know how many vehicles we are talking about. What if that 10 million is a total figure for like 3 vehicles? Are we getting that? Because the asset register will give you details about that vehicle, the total vehicle, and it will give you breakdown. How many vehicles, the plate number, the type of vehicle, Toyota, Hiace, Honda, it will be there. The date we purchase that asset. You understand? Amount we purchase that asset. How long have we depreciated the asset? So fixed asset register will give you more detail concerning the asset. The thing is that at the end of everything, the assets you have, the value of that asset you have, must be the same thing you have in the financial. You must be updating it every year as you are concluding the financial statement. Are we good to go now? So let's start. We should be able to finish this within 130 minutes. Between 1 hour and 30 minutes. The name of company is House of Accountants. House of Accountants. What this one is all about is fixed assets register. Don't tell me I'm too fast when you are still looking at me. Oh. So make sure you start now so that we will arrive at the same junction. Fixed asset register. Fixed asset register. I think there's a space here. Okay, no space. So fixed asset registered assets December 2022. Are we good to go? Fixed asset registered assets December 2022. Let's start with motor vehicle. Motor vehicle. So for motor vehicle, we will have class, classification. We have classification. After classification, we can have what we call cost. Or before cost, we can have location. After location, we can have dates of purchase. After date of purchase, you see now, she's not disturbing me. I was asking who is the person, she no answer. You go stay there for long, eh? I should stay wicked. I should be like Ika of Africa. Okay, so we have classification, we have location, we have date of purchase. Okay. After date of purchase, what again do we have? Condition. Yeah, you can, if you like, you can put condition. It's just to give it's something you can create yourself. Just to give you, that's a classification. That's a classification. Eh? Yes. Huh? No, it's not. You know, this asset register we are talking about is not only motor vehicle. So this heading we are designing must be for all the assets. But building doesn't have taxes on it. It means there's no need to put it there. Just put just put tag number. Tag number is better. You understand? So that tag number, instead of, because you cannot tag the motor vehicle, you will now use what? You will use plate number. You will understand? That's all. Another thing, I think this information is enough. Let's put the cost now. The cost. The cost. We can also have disposal. You can't log in again because once I remove you, won't be able to log in again. I don't know why you are disturbing yourself. Disposal. Or don't let us put disposal, not to confuse us. Let's put accum depreciation. Accum depreciation. Accum depreciation. Then let's say current, or let's say charge for the year. You can call you. Hello? You will give me like 5 minutes, so let me just come and do that. From where we stop, we have accum depreciation. We have charge for the year. Or let me say charge, yeah? But what we call it is charge for the year. You understand? After charge for the year, we have carrying value. We have depreciation year. There's no standard that says this is how you must do it. You can just decide to design it on your own, how you want it to be. I can say I want to make this one to be a blue color, just for a better what? A better presentation. I think too deep. Okay. So this motor vehicle now, we now have a full address. So you can say Toyota maybe Toyota Camry. Where is the location? That would be office. Date of purchase. Let's assume we purchase it in 2022, or let's say 2020, let's say 2021. 2021. Huh? Okay, we can put the amount. Let's say August, or let's say January. January 2021. January 2021. Condition. Is it good or bad? Or fair? So let's put good. In good condition. Let me tap R. I want to make sure we are all together. Good condition. What is the tag number? The tag number can be the plate number of that car. Let's say AF 567 AAA. So let's increase this a bit. Are you getting the gist? Then the cost, how much do we purchase it? Let's say it's 5 million. ₦5 million. Because we purchased this thing since last year, no doubt we must have depreciated it last year. That depreciation we have charged so far on that particular vehicle is the accrued depreciation. So, okay, we can as well create another thing here and call it rates. That rate is for rate of what? Rate of depreciation. So for motor vehicle, let's say they are using 20%. They are using 20%. So they purchased this thing last year, January, which means they should have charged depreciation for the whole year. Yes or no? So it means depreciation they will have charged last year is how much? Is 20% of this amount. Which should be what? They must have charged 1 million last year. You can just calculate 1 million on it, that's all. Yes. And with you. And we are preparing for 2022 December. That's 1 year. Are we good to go? So that is 1 year. So if they charged 1 million last year, they will also charge another one this year. And that will be another 1 million. That will be 2 million. But this one, it will now be 1 million. Now, Before, let's create another space here. Let's call this place Akum depreciation. Let's call this one Akum depreciation. Let's call this one previous depreciation. So the previous depreciation is 1M. Current year depreciation is 1M. What is now the new Akum depreciation now? The new Akum depreciation will now be addition of what? Of previous plus what? Plus the new. So Akum depreciation is now how much? It's now 2 million. Sure, we are getting it. The carrying amount will now be cost minus what? Minus Akum depreciation. So 3 million will be what we are going to have in the statement of financial position. Are we good to go? That's the carrying value. The last one is just for you to state how many years have I depreciated so far? I have depreciated this asset for what? For 2 years. It asks how many remaining 3 years. So we actually put the remaining years here. Depreciation year. So we put the remaining year here. And that is number 1. If you have another vehicle, let's say that vehicle is a lorry, or maybe it's a bus, Toyota bus. Okay, whatever name you want to call it, but let's just call this one Toyota. This one is also for office. Let's change this first one to MD. Do you understand? It means on whose possession is the vehicle. So the first one is for MD and it's still under company's vehicle. The second one is office or general, whatever they want to do. When do you purchase it? Let's say they purchase it August 2021. August 2021. That would be, oh, sorry. That would be August 2021. August 2021. Are we good? MD, that's the car for MD. Yes. Let's say fear, because they've been using this SIM for some time now. What's the number? The plate number should be 77 PPO/66. Anything. What is the percentage? Vehicle must be the same rate. You cannot say you are going to depreciate one vehicle 20%, another one 30%. It must be the same because they are class. How much do they purchase it? Let's say they purchase 7 million naira. What is the previous charge they will have charged here? What's the previous charge? 1.4. Let's say 20% of 7. 20% of 7 will give us what? We give us 1.4. But 1.4 is for the whole year. They not purchase these assets in January. They purchase in what? August. In August, September, how many months? 5 months to December. It now depends. If it is towards ending, so but because we are putting August, we are going to depreciate in August. We are not putting day. As we are putting day, we can consider the day. But it's better you just use months, not to confuse us. Do you understand now? So that is 5 months. So for 5 months, we have to divide this one by 12. So it means monthly it will be 116. Then now multiply it by what? 5. By 5. So it means they have depreciated this amount so far. They've depreciated this amount so far. So we can clear this one. Then they will depreciate another full year. Another full year will be how much? 1.4. It will be 1.4. We are assuming that they are using straight line what? Method. Assuming it's not straight line method, we need to deduct the previously charged from the cost before you now multiply by 20. But we are assuming straight line is what is in practice. Nobody is using balance method. So it means total charge will now be what? Will now be this plus this. That's 1.9. 1.9 less the cost minus the accrued 5.0 million. How many years have we charged this? How many years do we have more? We have like 3 years to go. Is that not simple? It's simple. It's simple to calculate to do. That is fixed asset rate. So the thing is that let's assume that that is the end of the motor vehicle. This amount you are seeing here, this amount you are having here must be the same amount on your what? On your fixed asset schedule in the financial statement. So this will be the total motor vehicle in that schedule. Assumption, what the third line now, now was new engine for that first car. Maybe the engine of now was the new engine for that first car. So if you have new engine, okay, you have new engine for that first car. So no wala. You can capitalize it. You can capitalize it. You can put it there. It will only increase the value of the large part of the asset. So no wala. But it will not be as at the year you purchase that particular. So if you have new assets now, if you have addition, you just put the date. The date will state maybe it's a new, maybe it's addition or not. Do you understand? So if you have addition, I just put 22. That is addition in that year. Do you understand what I'm trying to say? If you have disposal, just come here, remove that particular, you remove the cost, you remove the cumulative, everything about it. Assuming this asset has been disposed now, it means you will put 5 million. Okay. You will remove previously charged. You will remove this one. You will remove this one. You will remove this one. So it means the only thing you are going to be having there will now be what? Will now be this figure. So this one will help you to know which of the assets are you talking about specifically. Which one was disposed? Which one are you talking about? Which one is the new asset? So when auditor comes to your company, they can just come to your fixed asset, look at it, and go and verify if they actually what? Yes. Are we getting that now? Let's take another one. Let's take building. The building has to be separated from land. But according to IFRS, you cannot say land and building. So it has to be separated. So the land separately, building separately, because you cannot depreciate land. So the same thing we have here. We also what? We also be here. So we now start giving the information. When we say building, what type of building are we talking about? You can call it factory. Factory building. Location, where? You put the address. Ikoyi, Abi, Ijebu-Ode, anywhere you can put the full address there. So that when auditor want to check, they can go and verify if the building exists. Dates of purchase, let's say 2022. Condition, good. If it is work in progress, you put work in progress, but you will not depreciate. So you will not depreciate. But if it is completed, you put completed, good condition, whatever you want to put. So it's a good condition.
Well, if it's completed, but it does, they are not using it as another women, they are not using cooperation.
Depends. Just go back to IS 16. IS 16 will guide us on what to do. IS 16, PPE. IS 16 will now guide us. When do we supposed to charge depreciation? Is it when it is completed or when it is put into use? IS 16 say when it is put into use. Do you understand? However, there are some cases that you have already finished it, you are not using it, you just leave it for the building has started depreciating already. Either you use it or not. Even if you are not using it, that's when you are going to depreciate from. So that is IS 16 for you. Then tag number. If you have any tag number, so it can be, you can just create any number for the building. You can put CFO or whatever number to it. So let us put 333-000P. To differentiate building to building. Now rate. Let's say the building would be 50%. Why am I using 50%? Building will last longer than what? A motor vehicle. The standard, there's no standard. It's only cars that have standard. That is why we have capital allowance. So tax people will say, Oga, this 20% and 50% you are putting here, we are not agreeing. You will now compute their own. So it's a normal, you can choose your own rate, but the rate should be reasonable. Cost, let's assume we bought the building 90 million naira. Is a million, is a
That means
when you say 50%, is it 50? Oh, sorry, 2%. Let's use 2%. 2%. It means it will take us 50 years to depreciate. Sure, we are getting it. So because we bought the asset this year, let's say January. Because we bought the asset this January 2022, there won't be depreciation, there won't be previous depreciation, yes or no? So that will be 0 because we have not started depreciating. We will not depreciate this year. Depreciation chart for this year will now be 90 multiplied by what? Multiplied by 2%. That will be 1.8. Then accumulation will also be this figure plus what? Plus this figure. That will give us 1.8 as well. Then the carrying amount. The carrying value will now be what? 90 minus what? Minus accrued. 90 minus accrued will give us 88. 88 is the what? Is the carrying amount. Then depreciation year that remain will now be what? Will be now be 49 years. There's nothing to be doing about this. Do you still want us to do anything? I think it's fine. Are we not okay with this?
Hello, sir. I have a question, sir.
Okay, I'm with you.
Okay. That 5 million on that motor vehicle, the first one, on that cost, the one inside bracket, 5 million inside bracket. I
And
didn't.
we are just assuming that they dispose.
Okay. Okay.
So if I want to assume they dispose now, I will state the same information about this car. I will put it here. I will put it here. I can create another line here. I can create another line here and call it what? And call it disposal if you like. Or if you don't want to call it that way, you should know that anytime I put it in jacket, that is a what? That is a disposal. So this 5 million naira, I want to say it has been disposed of. I will say minus 5 million naira. All the depreciation charge also must be removed. So I will say this 1 million naira has been removed. This 1 million naira has been removed. Then the one that was charged here also has been what?
Removed.
Has been removed. Then this accrued depreciation also has been what? Has been removed. Everything concerning that particular figure must be totally what? Must be totally removed if there's a disposal. Then what am I going to have here? The 3 million that is hanging there will also be removed. So it means what I'm going to have here now is the 5 million naira. So that is what I'm going to have in the what? In that particular financial statement. So this one is a disposal. Disposal. If you like, you can put comment. You can just design it anyhow you want.
Once it because of what is purpose, to present to the auditors, external auditors, so that they can be able to know the amount, part of the amount of the motor van that was disposed of, and the amount which has been depreciated out of it, and the sales proceeds.
And that's why we have this information. Total depreciation so far on that asset is how much? It's 2 million. The cost of that asset that was disposed is 5 million. So they should sell that asset 3 million and above. So if they sell below 3 million, it means there's a loss on disposal. Because the value of that asset is 3 million as at the date we dispose. Yes. So if they want to sell at all, they should sell more than 3 million so that they can have gain on sales. So that's just it. Fixed asset register is not that difficult. It's just for you, by the time you do this one, you understand that it's just for you to have detailed information about all your assets. You understand? If I want to do the fixed asset for this place now, okay, let's do this one now. We are done with the building. Everybody, let's do the fixed asset register as an exercise now. For the furnitures we have here, for the at least 3 fixtures we have here, 3 assets we have here. Let's 3 assets we have in this hall. And yes, just put your own normal price. But we are assuming that they are all purchased this year. Do you understand? We are assuming they are all purchased this year. Oh yeah, everybody. Let me mention them for you. We have projector. It's an asset. Projector will be under what type of asset? Under computer. I mean, we have office equipment. Yes or no? We have AC, office equipment. Yes or no? We have blind. Blind is 50. furnitures and fixtures. These chairs you are seeing here, they are all furnitures and fixtures. Fan are furnitures and fixtures. Not again. Laptops. So many laptops here. Just start, I think I want laptop to be in your answer. You understand? Count how many number of laptops? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 laptops here. So put the laptop and make sure you categorize. I think we have HP. My own is a Dell. We have HP. We have Dell. We have HP. We have this logo is yours. Huh? So Sony, I think it's Sony. Hopper. Oh yeah. Let's be, but make sure laptop is part of just 3 assets. Do it in this way. Let's see how it looks like in 5 minutes. Then after that, I believe if you can do that, I mean, fixed asset is like become. Let me pause for a while. Let me pause for a while. Let's try to finish it up from what we have done so far. So let's assume we have office equipment now. Office equipment. So I've just copied the same thing here. I've just copied the same thing here. The classification, I'm talking about laptop. Location is in the office. Date of purchase, I said we should use January 2022. Is it one I asked to you? And then, yes. Okay, I said, okay, no wala. The condition, let's say is good. Then tag number. The tag number, you know, we have mentioned laptop now. We will not describe it. Dell, I want to use Dell because I'm using Dell. I'm using Dell laptop. Sure, you can, yes, you can mention it. You can create additional space and mention quantity. Like this, like we want to talk about 5 Dells. You don't need to be saying Dell 1, Dell 2, Dell 3. Just say 5 quantity. You can create it to suit you whatever you want to do. So Dell 330. Do you understand? Great. Let's say we are using, so someone say 40%. You can't just use any rate. It must be reasonable, like I said. So the Dell, let's say we bought that Dell 500,000. It cannot be 20 million. The figure must be reasonable as well. So because it is just this year, we won't have depreciated from last year. So it means we will have here as a 0. Then here, the charge for the year will now be this figure multiplied by what? Multiplied by 20. We have this figure. Then accrued depreciation will be this plus this. Then carrying amount will now be 500 minus what? Minus accrued. It means we will have 400 to go. How many years do we have? We have 4 more years to go. That is that. So people of God, let's stop here. Let's look at land. For land, because we cannot do land and building together. So for land, we can just create here land. So for land, classification Abi, it can still be just land. It can be land. It can be farmland. It can be site land, whatever you want to put it. So let's just say site land. So location, we can say Ikorodu. Ikorodu, you can put the address there. Number 5. Number 1, Odo Tonguyan, Odo, whatever. Just put the date there. 1, Odo Tonguyan. Then date of purchase. If you purchase it, let's say we are purchasing from January 2020. Condition, Virgin Land. Abi? When I get there. Condition, we can say Virgin Land or whatever you want to put it. If it is fence, you can say fence, whatever you want to put there. Tag number. The tag number of the building, you can say whatever, Elepe 110. That's what our madam said we should put. Rate, it will now be 0. You cannot depreciate the land. So there's no depreciation. The cost is 70 million naira. So exactly. I think that should be the tag number, or that should be the condition. You can say 1 acre. You understand? 1 acres depends. Previously charged is 0. This year is 0. Accrued depreciation 0. Then cost minus accrued will still give you that particular. How many years remaining? Remains 0. Chicken. So that is how to go about the fixed asset register. Straightforward and simple. So at least today we have done 3. We've done budget. We've done. You can put the tag number. Either you have the expiring date or no expiring date, it doesn't concern plan. As long as it's your property. If the cell phone expires, you will go and renew your whatever. That does not mean you are not the owner again. So, people of God, this is where we are going to stop today. Any information, any question? Okay, sir. I'm going to send. And the management account we did last one too. This is fixed. The what? Guide. Oh, okay. I've downloaded it already. I will also share that one.
That's something always review any hours, they evaluate any hour. Like an asset that remain like 1 year to finish the lifespan.
They will now review.
They now suddenly review, they review by 4 years. Even after that 4 years, they review again by 4 years. After 4 years, they review.
Okay.
Even to the extent they make mistake, their computation, their applied position is not even higher
Than the cost.
than the cost.
Okay.
The guides on this review
Okay.
for
So
evaluating of assets.
there's no, the IAS 16 does not say that this is the guide, but what IAS 16 states is that you can review not every year, but maybe 3 years or 2 years. So reviewing every 4 years, they are still on track. So they can review using cost model or evaluation model. So it all depends on the method they are using. So however, what they're supposed to have done is that revaluation, if the cost was 10 million before and they revalue it, and it was revalued by a professional, not just me looking at it and say, it is now 15 million. A professional must revalue it, certify that yes, this is now the amount. So all you just have to do is, if it was 10 million before, you will just add 5 million. That 5 million will now be as addition revaluation surplus. So if you have been depreciating that 10 million for like 3 years before, do you understand? You will now add the new value. It's not the 10 million you are revaluing. You cannot add it to the original cost. It's supposed to be to the current value of that asset. It will now go up. So by the time it go up now, you now divide it again by the remaining useful life of the asset. I don't know whether that one is clear. So if you bought that particular asset, it's going to take 5 years. The cost of that asset is 5 million naira. But you have depreciated for 2 years. And the value is now 3 million naira. You now revalue that 3 million to be 4 million naira. So you will now add the difference of 1 million to 3 million to make it 4 million. That 4 million is now what you are going to depreciate now using the remaining useful life of the asset, which is the 3 years. So it will affect depreciation if they do it well. It will affect the depreciation. The other thing is that the accrued depreciation will keep increasing until they fully depreciated ones. They fully depreciate ones.
What's the benefit for some companies that depreciate stuff for 2 years and dispose it? But they remember
That's their own cup of tea. But the thing is that the tax people will not agree. It will still result at the same thing at the end of the day. But for that 2 years is too early. So tax people will not agree. They will depreciate it for 4 years. So it's going to be a temporary difference. You can go and watch my video on deferred tax. That's where the deferred tax is going to come over.
That's some assets that sound like desktop.
Let's say like what?
Desktop.
Desktop. Okay.
And we're using it for like I believe the rate is 20%. Before 10 years, they said yes, but we are still using that. See, okay.
So that's the reason why we revalue. If the asset is still okay, it's still serving you well, you will value and continue to improve. Do you understand? The same thing in my own organization too. We have used some assets like our vehicle, our staff board. We have used it for maybe like 10 years. But because of good maintenance, the bond is still okay. And it has been fully depreciated. So what do we do? You revalue the business in the financial statement, you start acting. And the value is up. You now know the value of that motor vehicle as at that date. It will now come as if there's addition. So all you just have to do is to say, like the way we stated the disposal, you will state it, the name of that vehicle. But instead of cost, it will not be revaluation or revalue. You will not start taking it again.
it will make useful life. And the evaluation will be like that. Because if you are buying a new asset,
But it will not be the same detail about that the same classification of that part. Are we going to go now? Which one is no? Okay, we said no. May I ask your question? Welcome back.
And at the end, you stop in the your record is recorded for 5 years. What do you do?
And you are no longer moving. That is disposal. You remove. You can dispose it. If it's not useful again at all, I know that nobody really is wasted. Something like that. If you so wait, then and you are still paying for that. And it's not for you. If it's not for you, why are you paying in the first place? You know, it's not all the intangible assets are going to be paid. There are some specific ones you can appreciate. There are some that you don't. There are some that don't have large they consider them to have infinite life. Them to have room for it. It could be done in the same. That we cannot do change. From all the fixed assets, there is a difference between fixed assets. From the top, from the ending of the thing we prepare, we call it fixed assets. So you cannot put intangible assets with this one. Intangible is not fixed. This one is only meant for IAS 16. IAS 38 is the one covering intangible assets. Do you understand that? All right. Online, in a quiet to letting happen. Now don't run for months.